and it is oil marketing companies that are in focus because the street seems to have taken a very favorable view on a lot of these stocks. I'm talking about BPCL, IOCL and HPCL. The street believes that the marketing margins for most of these companies should be pretty robust as crude oil prices have cooled off. And you and me, the consumer, we have not seen the benefits on those price cuts at the petrol pump. That's the sum and substance of it. But Sonal, of course, has all the details, the color. So Sonal, fill us in. I think the stocks are already reacting 1 to 3% higher on most of them.
Oh yes, and that's because, as you pointed out, marketing margins, they are in focus, expected to do well because of the way crude prices are falling. And it's not only the oil marketing companies, brokerages have turned bullish on the entire oil and gas space as a whole. Let me start with JP Morgan, where they talk about how Indian refiners are very profitable right now, not only in the marketing segment, but even in their refining segment. Their actual refining margins are much better than the headline GRMs as well. However, they do not think that retail fuel price cuts are on the anvil, contrary to what the belief has been so far. They broadly see a positive earnings environment across all the refiners, be it Reliance Industries, be it HPCL and IOCL. These three are their top picks as well. Motilal Oswal talks about the marketing segment now because remember, all marketing companies, they have not changed prices since April 2022. That's more than a year, and this despite the fact that crude oil prices, they touched levels of $110 per barrel. But now prices are below that $79 a barrel mark, and that means the marketing segment is doing better. Earlier they had losses both on petrol and diesel, anywhere between 6 rupees to 10 rupees in both these segments, but now the tide has turned, and in both these segments they are making profits anywhere between 10 to 12.5 rupees per litre. So marketing segment, of course, is doing well. Now ICICI Securities talks about the entire sector, couple of tailwinds in FY24 that they talk about: moderate crude and LNG prices, higher domestic supplies of gas, and to a limited extent crude as well. They speak about the gas transportation infrastructure, which is expected to do well. The tariff hikes that have come through will be good for utilities like GAIL and GSPL. And lastly, CLSA speaks about the gas space because LNG prices are lower. Gas consumption has gone up by 1% on a YY basis, 2.2% month-on-month basis in April 2023. The LNG demand has risen by 5.5% on a YY basis, 10% on a month-on-month basis. And that's why they prefer the likes of city gas distribution companies, IGL, MGL, and also OMCs and Oil India. So brokerages are bullish on the entire oil and gas space now.
All right, Sonal, thanks a lot for taking us through all of the action. So clearly, all of these stocks doing very well in trade today. BPCL, one of the top gainers on the Nifty, like we were just mentioning.